Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and all the market strategies that top market advisors are advising to all our viewers this morning. Now remember, the markets have actually managed to stretch their winning run to the sixth consecutive session as of yesterday. We'd opened higher. We went up beyond even 25,100 mark during intraday session yesterday. But although towards the end there was some selling pressure, especially led by the broader markets that we did see, but we managed to end into the green as well. 25,083 was the closing mark. Now, what is the cue that we're getting from across the globe today? Well, on Thursday, we've seen that the US markets, they settled lower ahead of Jerome Powell's speech. The S&P 500 fell by 0.4%. Nasdaq was down by 0.3%. Dow Jones average also fell by about 0.3% in trade. Now, when we talk about the Asian markets, they were still trading in the green this morning as investors are still looking for some guidance on US Fed's upcoming monetary policy moves as well. So we did see South Korea's Kospi was up by about 1% in trade. Japan's Nikkei was seen rising by about 0.1% as well. You can also look at Hang Seng and China that was also up in trade about 0.3 and 0.4% higher. Although the GIFT Nifty is indicating a flat start, a muted start at 24,039 odd level. So that's what the trading setup is likely to be. But remember, there will be continuously news flows that will be seeing a reaction of the markets today from across the globe. There is again an increased amount of talk on the tariffs that could be seen coming in on India, the additional tariffs on August 27th. So that remains an overhang. There's a changing world order. Geopolitics is in the center of the stage. And back home, of course, the markets which are continually analyzing what could be the impact of GST rationalization. So all of that will be very important to address. And of course, like we've marked out for you, US Federal Reserve Chair Jerome Powell's speech at the central bank annual economic symposium at the Jackson Hole later in the evening is going to be giving us cues for the days ahead as well. Meanwhile, let's welcome our guest on board. We are now joined by Mr. Mayuresh Joshi, Head of Equity Research at William O'Neill India, joining in. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. I want to begin by first understanding from you, what's happening, in the domestic market first. This is in contrast with what we always start off with is the global markets. Domestic markets have actually led, and the cues that are coming in from India have led to the recovery in the markets in the last 2 weeks thus far. This week is the running one. And, we've again seen some signs of recovery in the trade after 6 weeks of losses led by the GST good news that's actually come in. I want to understand from you, how are you analyzing what's in for us? The GOM meetings are on. They're consistently approving centers' proposals on a lot of sectors there. What could be in the offing?
Morning, Sakshi. Always a pleasure to be on your show. I think the situation is very fluid, right? Specifically on the global front, because you're really not sure in terms of the tariff impositions that the US is probably bringing about. They've already brought about a notification. Next 4 or 5 days, that notification will come into effect. So is there some element of, will that notification get prolonged for some reason, or will we negotiate hard on that front? Is something to be seen. On the face of it, if this continues, I think the consensus is around a 60 to 80 bips hit on the GDP as we speak. And therefore, I think the kind of moves that the government did alternatively in terms of GST rationalization, as an example, I think it's a very good move because consumption was clearly lagging. You had started seeing initial signs in terms of green shoots for consumption starting to come back. And therefore, once GST rates are rationalized, if the tariffs go in the form that they are at this juncture and the avatar that one really talks about, I think there can be some element of recoupment that can probably happen with consumption from the GST rationalization expected to go higher. At the same time, I think corporate earnings were definitely soft, and therefore even from Q2 perspective, they might remain soft with a combination of monsoons, which leads to a seasonally weak quarter or a soft quarter. But the hope is with all these measures that have now got deployed, ample liquidity, rate cuts, GST rationalization, better monsoons leading to better rural discretionary spending, urban spending and consumption expected to come back with the tax cuts and lower interest rates. I think the second half corporate earnings recovery can be relatively better if one has to peg it that way. Again, the hope here is that the Trump tariffs, specifically the additional tariffs that are imposed, might not come through with strong negotiations coming. And even on the existing front, if you're able to negotiate well, even those rates can go lower. So I think that is the hope there. But it's very fluid as I speak. And therefore, I think the volatility in the markets might continue. The range-bound move that we are probably seeing might continue unless we receive clarity on both these aspects.
Absolutely. Thanks a lot for giving that all broad context for our viewers to really understand the key triggers that we are looking at right now. I will just probe a little bit more on the GST aspect. There's a lot of discussion that's still taking place. Of course, October is when the final stamping happens to all those recommendations that either from the center to the GOM and now from the GOM to the GST Council is being made for various sectors. We're trying to understand whether the GST, cut or the kind of slashing that we are expected to see, will that really impact in reduction in prices for the end consumer at large? Why did this question arise is because we've been looking at insurance since yesterday. That was the big buzzword, that insurance is being exempt. Optically it looks like a fantastic move out there that, an essential service like a health or a life insurance should not be taxed at the end consumer's end. But now the, sense some of the industry is sharing is that since they lose out on the opportunity of input tax credit, they're not sure whether the price cuts will get reflected to the end consumer or not. How do you see that as an aspect? Is that a question that one should continue to ponder for all across the sectors, not just for insurance then?
Oh, absolutely. I think that's the good question, right, Sakshi, on whether input tax credit can be availed. Because in the existing GST structure at a 5 and a 0%, the ITC is not available for most goods that fall under the category. And therefore, I think this is a big question. And if ITC is not allowed, which is input tax credit is not allowed or is disallowed to a certain extent, I think the incremental benefits that might come through with the rate cuts might not be that profound. And therefore, I think we need probable clarity on this aspect. And that is where the confusion is, right? I think the markets reacted positively. But when they started analyzing this a little bit more in detail, in greater depth, I think that confusion is something which is also creating an overhang. So I think once that overhang is probably removed or reduced to a certain extent, we will have further clarity. Obviously, I think if ITC benefits are expected to continue, then who will bear the loss in terms of the foregone revenue to a certain extent, both to the exchequer and the states? And what kind of an impact does that have on the fisc to a certain extent? Does that get compensated with better volumes, which are probably plagued at this juncture and not getting reflected in core numbers because of GST being levied on certain goods and services? I think there are ifs and buts, and that is where the confusion lies.
Absolutely. I think this will need even more discussion sector-wise as well, which we will come to in a bit. Let me just mark out for our viewers, 25,122 is the level at which you're seeing the pre-open trade currently at. The first tick was above 25,200. So the market still aiming to push higher from where we are at the current stage as well. So let's hope that this only turns out to be better. There's slight, kind of profit booking that we're seeing at those levels in the pre-open trade, 25,100, although still with us. Let's hope that this continues for the better. The other key aspect that you also marked out in your opening commentary is the tariff overhang that continues, because 27th of August is when we are looking to see whether India will be faced with another additional 25% tariffs. Now, so far, given that there are no negotiations currently underway and there is still a question mark on whether there will be a breakthrough or not, there's also an additional statement that has actually come in from US President Donald Trump's trade counselor, that's Peter Navarro, who has actually accused India of acting as a laundromat for the Kremlin by purchasing discounted Russian crude oil, refining it and selling the products at premium prices worldwide. Navarro has said that India's actions were perpetuating the war in Ukraine, dismissing claims that Russian imports were essential for India's energy security as well. He's also hinted at that he definitely believes that tariffs are coming for India on 27th of August. Let's quickly listen in to what Navarro had to say, and we'll come back to a conversation with Mayuresh on that bit.
Yeah. The doubling of tariffs to 50% is supposed to take place August 27th, just 6 days from now.
Yes.
Do you see that taking place?
I see that taking place. India doesn't appear to want to recognize its role in the bloodshed. It simply doesn't. It's cozying up to Xi Jinping. Is what it's doing. It's not. And by the way, I wrote that article in the FT just to deal with the propaganda of the Indian government to make people want to feel sorry for them. Oh, they need the oil. They don't need the oil. It's a refining profiteering scheme. It's a laundromat for the Kremlin. That's the reality of that. So I love India. Look, Modi's a great leader, but please, India, look at what your role here is in the global economy and good here. It's like what you're doing right now is not creating peace, it's perpetuating the war.
Okay, so Mayuresh, there you heard it. What do you make of the statements that are coming in from the US when it comes to India? Seems like, they definitely want India to back down and to accept all the kind of, agreements that we have not yet done, especially on agri, on dairy products for that matter. Do you think that's one reason that they are circling around the other aspects to, probably push us down at this point in time? And since India has made its position very clear on various forums, we've seen Prime Minister Narendra Modi talk about, at least in 2 instances, where he has said that farmers' community is going to be paramount for us, the interest of farmers is going to be paramount for us. We've seen, S.J. Shankar come out and talk about it as well. So many of our leaders, we've seen Piyush Goyal talk about it on Business Today Television's own platform of BT India at 100 event, that he has clearly said that we are not going to bow down to, until and unless it's a win-win situation. So how do you see these statements coming in case both continue to be at loggerheads and there is no breakthrough? How badly are we going to be affected in case that 25% tariff comes in additional?
So as I said, if that additional comes in the current avatar, I think the expected consensus hit of GDP is anywhere between 60 to 80 bips. Now, do we get alternate markets? I think that's very difficult, Sakshi, in a current environment to probably get alternate markets for compensating that kind of a trade loss. And therefore, I think the move, as I said in my opening remarks, the GST rationalization offsets a large extent if the Trump tariffs in the current avatar probably go through, and then reduces the stress on our GDP to that bit. Having said that, I think Trump administration's policies are very clear. They want to keep the hard ball rolling out, and they want India to be on the negotiating table, with the US probably having an upper hand, which you are not allowing at this point of time, which is clearly a perturbing fact for the Trump administration at this juncture, because they were expecting that a large part of countries which have signed deals with them would agree to whatever they're putting on the table, and we are not doing that. So kudos to our leadership at this juncture. But yes, as I said, the impact, 60 to 80 bips, largely offset with the GST rationalization.
Okay. What do you also make, Mayuresh, of the changing world order? Something that you also heard Navarro speak, that, India and China now mending their ways, coming together on a lot of things. China is supporting India when it comes to, US trying to pin us down with such kind of tariffs. China has also lifted a lot of restrictions on exports on a key sectors that were impacting us domestically as well, namely fertilizers, rare earth magnets, for instance. And now we are having these consistent meetings. Prime Minister Narendra Modi is also traveling to China. That's expected to also further what's currently happening. We are constantly talking about, how we should promote people traveling to and fro between the two countries. Visas is, another positive that we are looking at. So how do you see India and China coming together? What kind of opportunities does that throw in?
I think in what form and avatar, I'm not a geopolitical analyst, Sakshi, but in what form and avatar, I think it is to be seen. And I think we are trying to send a message to the Trump administration. China, India, Brazil to a certain extent, Russia is coming out with statements as well. So the entire BRIC nations are coming together in a crisis situation like this. And therefore, I think the Trump administration is getting a very strong message that if the BRIC countries come together, I think there might be something on the table that you should probably start looking at as well. So I think interesting geopolitical developments. Let's see how that develops.
Absolutely. So those are the global developments that we have to continue to keep an eye out on, and we'll of course focus on our own domestic cues and see how the markets are shaping up in trade as well. The other key developments that have taken place as of yesterday is also the fact that with regards to market specifically, the market regulators SEBI and SEBI chief have indicated at least two developments that we should be looking at. One is on the derivatives contract tenure. There is a kind of expectation that SEBI is of the view that our weekly derivatives contracts should be extended. Now, what could that be, fortnightly or monthly, is something that we still have to wait. There is a consultation paper that we have to look out for. Now, apart from this, there is also this pre-IPO stage that SEBI is looking at regulating as well. So those are the two big aspects that we are looking at this point in time. How would you look at these developments with regards to our markets?
No, I think SEBI has started making its intentions clear for the last few weeks and months. And therefore, I think from a speculation perspective, which was pretty profound, because again, SEBI's data every year probably shows 90% retail investors are still keeping on making losses on F&O. I think the trend that they're probably trying to do is make from speculative to more of an investment mode. Have more of cash calls done, have more of long-term positional calls done, which might be effective in terms of protecting your wealth and reducing your losses. And therefore, from a risk-reward perspective, from a speculation perspective, I think the moves from SEBI are a step in the right direction. Does that affect a lot of traders in the market? Probably yes. Does that affect a few capital market participants? Probably yes.
Yes. So how would you look at these stocks like BSE, for instance, Angel One? They completely cracked in trade yesterday, 7.5%, 8% kind of drop that we actually saw. So of course there is a fear of volume loss there that they're looking at. Even if consistently we've been hearing from these exchanges that they're looking at increasing participation in the cash markets there. But you again see in the pre-open trade today there is softness on BSE shares again at trade, 2331. Even MCX is flat. All of these stocks were actually down in trade. What does one do here with these kind of stocks in the capital market space?
So a reflection was already there, right, in last quarter, where volumes had gone down for most brokers in this space. The exchanges as well. I think with trading volumes going down, I think a large part of their incomes from trading activities will come down. Annuity incomes might remain steady state. And therefore, I think the markets are probably reacting to the same element as we speak. But again, the run-up was pretty sharp for stocks like a BSE, Angel One, Motilal, as an example. Depositories might still continue doing well, in my opinion.
Okay.
But I think the best players in this aspect would be asset managers. I think AMC stocks might continue doing well because they are getting long-term flows. They are getting their SIPs in place as well. They've got a good AUM. Their capital expenses ratio are pretty stable with the numbers that they're now seeing in terms of flows over the last few quarters and years. And therefore, within this space, again, I think asset managers as a category might continue to.
Okay, so asset managers could be benefited, depositories could be benefited there. But would you say in hindsight, when all of this settles down over a long-term period, this is giving a great opportunity to even enter a BSE for that instance or a CDSL, all of these stocks too?
Yeah, so if they correct further, I think
Brokers
values will become a little reasonable. Absolutely, yes.
Okay, fair point. Let me quickly just highlight for all our viewers what has settled in the pre-open trade, 25,064, 19 points lower in trade. So something that the GIFT Nifty was indicating, a mild start to the day. What could be in focus again? It could be IT stocks, pharma, real estate, those that have been moving up. Autos were on the back foot yesterday. We could still again see some move on the positive side. Names like Tech Mahindra, Bharti Airtel, Wipro, Adani Ports could also be in focus. So that's how some of the pre-open trade has also settled in as well. Let me just also highlight for all our viewers, some of the kind of news flows that we are getting on key stocks that you should be looking at when they open up too. So let's actually look at, for instance, something like an Apollo Hospitals, because the promoter and the MD, Sunita Reddy, is going to be selling up to 1.25% stake via block deal. So keep that stock in mind. There's already an indication of a 0.4% of a downtake. There is an indicative deal size that we are looking at to the tune of 1,395 odd crore rupees, a floor price of 7,747 rupees per share as per some of the reports that have come in. So keep that stock in mind. Apart from this, look at Wipro. The company is likely to acquire Harman Digital's Transformation Solutions, the DTS business, for $375 million in cash, strengthening its ER&D capabilities. So keep the IT stock in focus as well. We look at even Hindalco. The Aditya Birla Group company has outlined a 5-year growth plan that's backed by a $10 billion in commitment to global investments to boost its aluminium, copper as well as special alumina value chain across India and Novelis operations. So Hindalco will be in focus again in trade today. From the banking space, I'm looking at IDBI Bank. The government is targeting to complete the core phase of privatization by March 31st of 2026 is what we are given to understand. Qualified bidders have already begun the due diligence, expected to conclude by September. This is what DIPAM Secretary Arunish Chawla has indicated. Now, apart from this, we're also given to understand is that we'll look at even Zomato, that's Eternal. The food delivery aggregator has incorporated its subsidiary Blinkit Food. So keep that in mind. It's a process that they have completed. Goldium International could be in focus. The company has raised 202 crores via QIP. And from the pharma pack, I'm also looking at Hikal. The company has received a warning letter from US FDA for Jigani, its Bengaluru facility, following February 3rd to 7th inspection that they have done. So those are some of the stocks within the news flow that you could be looking at as well. A minute to go before we start off with the market moves. Mayuresh, your sense of key stocks that have actually come onto your radar of late over the last 1 week or so.
I think within auto ancillaries, Uno Minda is something that we are keeping on our watch list, Sakshi. I think a very strong auto ang company with switches, seating, caskets, etc. And therefore, I think the kind of domestic sales that Uno Minda has, around 90 odd percent, well-diversified global operations, integrated plants in India, margin performance has been reasonable, debt equity is not too high, and expectations in terms of a large part of their product portfolio being platform or EV agnostic, whether it comes to powertrains or otherwise, makes it a very lucrative case, because the expectations from a content per car from a normal ICE vehicle of 12,000 odd rupees to an electric vehicle or even a hybrid vehicle of almost 36 odd thousand rupees means that accessory makers, which are having leadership positions like Uno Minda, can actually do.
Okay, fair point. I hope this has also given you a sense. Now let's quickly look at the markets. Started to take on the back foot, 25,048, about a 37 point of fall on the Nifty. The sectors that are still holding up are pharma, auto, and some gains on FMCG and mid caps that we see, and consumer durables for that matter. India VIX is on a higher note. You can see trading about 1 point. No, in fact, it's lower at 11.1 odd level. So there's some volatility that we're looking at. Pharma, realty, autos, these are the pockets that could be holding up. On the Nifty, you have Wipro, Hero Moto, Tata Motors, again the auto space that's also driving up. You can see Maruti, that's up, M&M, that's up in trade as well. So a lot of those auto names are back in focus. You're also looking at Wipro, which we already marked out will be in focus, 1.2% higher in trade. Bharti Airtel also about 0.5% up right now. Which are the sectors that are on the back foot? Banks. The Nifty bank is lower at 55,622, about 0.2% lower in trade. Private banks, financial services, both down in trade. You can see even oil and gas, metals also slightly dragging, but pharma is ticking higher, 0.4% up. There was some move even yesterday, and you're seeing a continuation of that. Consumer durables is another sector that's moving up. Real estate is also moving up strongly. Railways that started to get some momentum yesterday are also showing us some moves. So Titagarh Rail Systems is again up by about 3.7%. So that's the one that's also moving up smartly. Let's look at Vodafone Idea, another 2% higher in trade, and Divis Laboratories is also in focus. Brokerage houses have also penciled in higher targets for Divis, and therefore the stock is in focus. Anything within the Nifty 500 basket that we see, SML Isuzu, that's the one that continues to drive higher from here, 4,585, 4% up right now that you're looking at as well. Let me look at some of the other names that are higher. Our systems is higher in trade. You also have names like DCX Systems that's moving up. HOV Services is higher. So some such stocks that are also moving up in trade. Let me quickly go across to Mayuresh yet again. So Mayuresh, we're seeing again a volatile opening in trade, but a lot of sectors and stocks that continue to drive up. You were talking about auto ancillaries before the markets opened. SML Isuzu is something that I wanted to discuss within the auto pack. The way this stock has continued to outperform. How would you really look at it after M&M's acquisition? This has been a one-way up move for this stock. Any suggestion at 4,600 levels now?
I think if you're owning this, no harm in partially looking, because I think a large part of that move is now capturing in expectations of synergies that will come through. And again, I think all these mergers and acquisition synergies take some periodicity of time. And in case of SML Isuzu as well, yes, M&M was trying to plug its product portfolio to a large extent from SML Isuzu. SML is trying to create a couple of platforms which can be very, very lucrative going forward as well. But yes, I think a large part of the move is now gestated in. And therefore, some element of partial profit booking is not harmful.
Okay, got that. Well, let me also just highlight a few more stocks. Lemon Tree Hotels is also moving up today, about 3.5% higher. Our systems I marked out, it's now 8% higher. Novigo Solutions acquisition is the key trigger, 8% up move. So that continues to drive up, further. Titagarh Rail, as I marked out, the order win news is further moving up the stock. You can also look at Texmaco Rail from the railway space. That's up by about 4%. So those are some of the stocks that are higher. DCX Systems is driving up now, 10% of an up move that's coming in on this one. Indus Towers up by 1.5%. Let's look at Apollo Hospitals. That's the one where we are looking at the block deal impact to be seen, and therefore the stock is just down 0.5% at least at this point in time as well. IDBI Bank, like I pointed out, it's down by about 1.5% with the news flows coming in. BSE another 1.5% lower at 22.96 after yesterday's sharp sell-off. The weakness continues onto this one as well. DCX Systems, keep an eye out on it. It's continuously building up for the moves, now 13% higher. Have you been looking at DCX Systems at all, Mayuresh, of late?
No, don't try that, Sakshi. Sorry.
Okay. Let's also pull up some of the other stocks. Let me just, ask you to give us a view on these PSU banks like IDBI, which are now, have been waiting for a fairly long bit of time for the privatization, step up to take place. How are you looking at some PSU banks at this point?
No, selectively, I think they are doing well. They are expected
Okay.
to do well as well. And therefore, I think from a risk-reward perspective, valuations in favor, they're making good stage bases as we see it at markets with India. Rating rankings for a few of them look extremely lucrative. And therefore, stocks like a Bank of Baroda, Bank of Maharashtra is
Yes.
something that, in my opinion, can continue to do.
Okay, fair point. Let me also just bring up one more space, EMS. PG Electroplast is again up by 2% among the top movers in the FNO space. This one is an interesting one, Mayuresh. PG Electroplast we discussed when there was like substantial fall, about 30% in just 2 days after the company guided lower for its revenues and profits. But thereafter, slowly and gradually, it's been moving up. EMS is back in focus, especially with the point that China has removed some of those restrictions in the rare earth metals that are used for semiconductors and for EMS plays. How would you look at this space? Any key stocks that you are looking at positively?
Valuation sky high, Sakshi, for most
Yes.
players. Whether it's Dixon, whether it's Avalon, whether it's Cinema XGS,
Yes.
PG got affected because of the guidance
Yeah.
cut that we gave through. China news is creating a huge sentiment back into these stocks. But I think you have to be an extremely high risk reward investor or a trader to probably get into these stocks. And therefore, I think if you are having that appetite for high risk and high reward, Dixon probably can become one choice. But it's only for high risk and reward traders. I think these are not for value investors. All. So if you're a momentum or a growth investor, something that we do selectively in our portfolios as well, I
Yeah.
think some of these stocks might continue doing well.
Okay, fair point. I'll continue to watch out for that one as well. Let me also bring up some of the other spaces. So within the consumption basket as well, we did talk about auto space. How about FMCG, consumer durables? Is there an upside because of the GST rationalization here as well that you would want to play up?
Absolutely. FMCG might continue doing well. And therefore, I think with expectations of GST rationalization, the volume growth can come back. We are already seeing green shoots. Input costs have remained largely stable. And therefore, the operating leverage with larger volume, better pricing, EBITDA margins under control, we're showing stability and expansion. bottom line growth and cash flows might start improving significantly, which is always the case for FMCG players. So I think the base case is now shifted in favor of FMCG actually doing well in the second half. And therefore, players like Marico is something that we continue liking and holding in our global and local portfolios.
Okay, got that. So the GST move that continues, you can see names like Nestle pulling up higher in trade, many of such names that are moving up. But the one sector that continues to face drag is the online gaming space, with that bill getting passed yesterday. And you know, for last 3 odd trading sessions, we've been seeing consistent pressure on names like Nazara Tech. Even again today, it's down by another 4%. Delta Corp just about 1.5% lower. On Mobile Global also down in trade right now. Mayuresh, how would you look at these players at this point in time? Is there any benefit for Delta Corp coming in because it has an offline presence largely? And vis-a-vis Nazara, do you think there's going to be, you know, some more pain to be had?
Also, I think for online game companies, right, a large part of them are unlisted. Nazar obviously has an 800 crore
Yes.
investment in giant technology and pokerbazi. And that investment might be at risk because either they have to now completely take it off or they have to use that platform to create something else, which skill-based activities, which might mean that there might be further accelerated equity investments from the promoter side. Which might take time to accrue back into the business itself. And that is the risk that the markets are probably foreseeing at this juncture for these players. For Delta, I think largely neutral because they are largely running it offside. But you never really know what the regulator will come up with if today or a few months down the line, even when it comes to online or offline casinos. And therefore, I think as a space, I think where there is too much of regulatory risk, I think we stay averse.
Okay. Viewers, keep an eye out on the Nifty. You know, we are at 75, 77 points down in trade, nearing the 25,000 mark. So after 6 consecutive days of up move, we are seeing this downtrend. At least in the markets, there could be some profit booking that's taking place. And also right ahead of the weekend, you are seeing some pressure build up. So keep one eye out on that as well. Let me ask you on the telecom space also, Mayuresh, what's, you know, taking your attention here? We've been seeing at least 2 players, both Jio and Bharti Airtel, talk about doing away with their lowest tariff products at this point in time. Do you think the entire focus is now going to be on premiumization, raising of margins, since they have all the subscribers in place, all that they had to garner in competition that they have done, and now is the time when we should also be looking at second rung of tariff hikes coming in maybe?
Possibly, and therefore I think it's a smart move because they are weeding out customers which are probably dragging their ARPUs to a certain extent, and therefore prompting these customers to move to a slightly higher plan,
Yeah.
which probably might have a positive effect in terms of ARPUs. Obviously, the trend that you are now seeing is that ARPU increases will come through. At what periodicity is a question mark, but they will come through. We are still one of the lowest paying countries when it comes to data consumption across the globe. So there is a sufficient scope of improvement that will come through. And therefore, I think that is a base case scenario that the markets are working with. Data is going to be the biggest thing going forward. You're already seeing that. Imagine, Sakshi, I think I had a power outage last week, and without data, I was helpless. So I think,
Yes.
and you're so glued and affixed to your devices that you need to have that screen time. And whether we like it or not, an average screen time of an average user is anywhere between 2 to 4 hours. Between the kind of data that we are consuming is humongous, which will keep on continuing to grow. So I think these players are having a duopoly of sort. Vodafone Idea restricted to certain circles, BSNL to certain areas in certain catchment areas and circles as well. And therefore, from a subscriber market share, revenue market share perspective, I think they are doing all that they need to do at this juncture. And therefore, smart move, which will protect the revenues and probably ensure that balance sheet strength continues for both Geo
Absolutely.
and Nifty.
So what will be your top choice here?
So I think if you've got a Bharti Airtel, hold on. If you've got a Reliance, hold on.
Okay, okay, got that. You know, another space, you know, markets have definitely slipped below that 25,000 mark, and you can see a 92 point of a cut coming in here. So there is some profit booking that's definitely under play. So let me ask you on that only, Mayuresh. We did manage to hold above that 25,000 mark at least for 2 to 3 trading sessions. And again, there is some resistance that's coming in here. There has been a resistance for a fairly long time, and we've been seeing range bound reaction in the markets for a long time as well. What's your sense for the second half, festive season starting in early this time? By the end of the year, are we looking at retesting our earlier highs or even go beyond, or is it again going to be a range bound trade and it's only going to be stock specific?
It might be a little bit more sector stock specific, Sakshi, because there is a lot of global uncertainties that we need to tackle with over the next few weeks and months. So base case scenario one, I think if tariffs go in the current avatar, you're seeing that GDP hit, and the corresponding effect there will be GST rationalization and corporate earnings expected to improve in the second half, offsetting that pain, which might again mean that it will be sector and stock specific. The second aspect is tariffs go off with the additional tariffs, and even on the existing tariffs, you probably see some element of breakthrough. That's a huge positive, because then the kind of hit that you're probably seeing on the external, because of external factors on GDP, actually comes down. And with domestic measures expected to continue, that prompts your your domestic GDP to go higher, corporate earnings to improve. And as growth returns, FIIs, FDIs, which have been selling, will come back at some point of time. Domestic flow expected to remain steady state and constant in both these scenarios put together. I think scenario one, if that happens, you're having a range bound market. If scenario two plays out over the next few weeks, you're probably touching all-time highs. So I think it all depends on how things play out globally and locally. And therefore, I think it's going to be good. But one thing is for sure, I think a structural downside for the markets probably does not exist because of a lot of domestic triggers that
Fair point. All right. Anything else beyond the auto ancillaries that you'd like to mark out for us? Maybe after the earnings, have you done any upgrades at all, Mayuresh?
No, not really. So I think we continue with themes that we like, domestic focused themes, which is largely consumption, which is largely select banks and NBFCs, leadership stocks, select agrochemical stocks within healthcare, hospital stocks. And that is where I think our focus continues to remain. We will watch out for Q2 numbers, because Q2 numbers will give us a very good indication on the second half and then the quarters to come after that as well. So we are having a few stocks on our radar out of that as well. But Q2 numbers will give us a base case scenario for which new sectors can emerge as leadership stocks as well.
Okay, got that. Well, Mayuresh, it's always a pleasure to speak to you and seek such great insights for all our viewers that you always have week on week for all the viewers of Business Today Television. Thank you so much for sparing your time for us, and wish you, great health also. And we'll see you soon in Mumbai as well. Thank you so much for being with us. All right. Let me quickly now look at the market, viewers, and first 15 minutes out. So let's just navigate through the moves that are coming in. A large part of the market among sectors have also slipped into the red. So metals are down by 0.5%, financial services about 0.5% lower, banks are lower, FMCG, real estate, even the broader market. Look at small caps, that's 0.2% lower. IT, auto, PSU banks are also lower. Only pharma, consumer durables, slight gains on media and mid-cap stocks that you can actually see these sectors pulling up in trades. Now, which are the stocks that are hovering higher? BEL, Bharat Electronics, almost up 1%. M&M, L&T, Bajaj Finance is another one that's also on the move. Let's look at the declining names. SBI Life has pulled down today. You can see Hero, Asian Paints, Grasim, Adani Ports as all these stocks that have fallen in trade. Vodafone Idea, that's up. It's towering higher in the F&O space, top mover. Indus Towers is another one from the telecom basket that's higher. Divi's Laboratories has been seeing brokerage house updates, and that's why the stock is up. In the lower end on the F&O space, you have Page Industries that's lower. Adani Enterprises, Marico, Hero Moto and Tata Elxsi are all the stocks that are done in trade. So let me quickly look at first welcoming another guest of ours, Mr. Kunal V. Parar, Vice President Technical Research, Choice Equity Broking, joins in. First 15 minutes candle formed. Kunal, what's the sense that you have in the markets today after 6 days of gains? We are seeing a sharp pullback, 121 points lower, and we've also tested 25,000 on the lower end.
I think we may see a further pain than index from present level. Right now, Nifty is trading at 24,955, and further 100 point of correction I'm expecting from the present level. So nothing to worry about this correction. We may see some kind of bounce back as well with the strong support of 24,850. So this is the level that we are expecting during upcoming trading session.
Okay, got that. I hope this has also given you some sense there. Which are the areas you will concentrate in today as far as the sectors are concerned, Kunal?
Well, if you talk about sector-wise, stock-wise, I think one should focus on Cipla. Right now, Cipla is trading at 1587 level, and it is trading over its 100 days and 21 days moving average. Not only this, recently it has given a breakout of its recent top as well. So, we may see some good upside momentum in this counter from the present level. Right now, stock is trading at 1589. One can get into the stock at present level, and if you talk about SL-wise, downside SL comes at the 1550 1550, and if you talk about target wise, then first target comes at 1625 1625, and if stock breaks this level, then one way rally would be up to the level of 1680. So in this correction, I think pharma can do some better for our viewers, for our traders, so one can keep an eye on Cipla.
Okay, got that. So pharma story is definitely in focus. Consumer durables showing us some up move. Anything from this basket?
If you talk about consumer durable and all, right now, we have been witnessing some consolidation to bullish momentum. If you talk about Havels, if you talk about Voltas, and if you talk about other stocks, I think one should keep an eye on Voltas right now. Stock is trading at 1369, trading above its 100 days moving average, and it has also given a breakout of its range bound momentum. So further upside would be there from the present level. Right now, stock is trading at 1369. One can keep SL at 1300, and if you talk about target wise, first target comes at 1400, and stock breaks this level, then one way rally would be there up to the level of 1540 to 1600. So Voltas looks very attractive at present level. Not only this, even we are expecting a good upside momentum in Havels as well. Even since last 3 to 4 days, Havels has been trading above its 100 days moving average, and stock has a strong support at somewhere around 1520. So one can keep an SL at 1520. If you talk about target wise, first target comes at 1600, and if stock breaks this level, then further upside would be there up to the level of 1680. So I think one should focus on Voltas and Havels, not only for a trading perspective but also for medium term to long term perspective.
Okay, fair point. I hope this has also given you some sense. Anything within the defense basket that you like right now, Kunal? BEL is the top moving stock right now, 0.7%. Is the move also across the board, or is it only limited to BEL today?
Well, if you talk about defense counters, no doubt BEL is on top amongst other defense counter, and it is trading with a strong support of 100 days moving average. So, good upside momentum, good bounce back would be there in this counter. Not only this, even HL is trading at 4500, Solar Industries, DCX India, all these stocks are trading at very good level. But let's talk on HL and BEL. Right now, BEL is trading at 377 with a strong support of 100 days moving average. So one can get into the stock at present level. We will keep SL at 365. If you talk about target size, right now stock is trading at 377. We will keep SL at 365. First target would be at 386, and if stock breaks this level, then further upside would be there up to the level of 401. Now let's talk on the HL as well. Recently, HL got a good order from the central government, so it has a positive momentum for upcoming trading session. Right now, stock is trading at 4517 level. Not only this, stock has a strong support at 4375 level, and since last many days, stock has been trading in a range bound momentum only. But based on the momentum indicator, I think this is the time that stock will break this range bound momentum. So one can get into the stock at present level 4517. We will keep SL at 4425. And if you talk about target wise, the way stock has been trading on its daily chart, I think further upside would be there up to the level of 4590. And if stock breaks this level, then one way rally would be there up to the level of 4700. So BE and HL both looks very good at present level.
Okay, got that. I hope you'll have noted down all of these stocks. Let me also pull up. I think Solar Industries is also ticking higher, 2% up in the F&O space from the same basket. What about Telecom? Vodafone, Indus Towers, they're both high in trade. Last 2 days, we've been seeing a lot of momentum in Bharti Airtel too. Telecom space, what's catching your attention?
Well, Bharti Airtel, if you talk about right now trading at 1927 level, I'm not seeing any particular direction, any particular momentum in this counter. Since last 3 days, stock has been trading in a range bound momentum only, and the stock has a strong resistance at 1960 level. So I think one should avoid this stock. And if you talk about even Idea or Reliance as well, then I think one should avoid this stock as well. I'm not seeing any particular direction. I'm not getting any confidence in this telecom counters as of now.
Okay, got that. Let me look at the auto space then. Anything within the auto space that's catching your attention? Both M&M and its subsidiary SML Isuzu have been driving up. Anything within this basket or beyond even these stocks in the auto basket that interest you?
Well, yes, M&M is trading at 3,392 level, and I think further upside would be there. The way the way this particular stock is expanding their product, particularly in the SUV and compact SUV, I think it has a good advantage and it has an upper hand compared to other automakers. So one should focus on M&M at present level. Right now, trading at 3,394 level. Stock has a strong support at 3,300. And if you talk about target wise, the way stock has been trading, the way stock has given breakout of its recent top, I think we may see a good upside momentum up to the level of 3,460, 3,460. And if stock breaks this level, then further upside would be there up to the level of 3,580. So 5 to 6% of gain that we can expect from this counter. Not only this, I think one should also keep an eye on TVS Motor. I think further upside would be there. The way stock has been trading in its uncharted territory with our average volume activity. We may see a further spurt in the counter from the present level. Right now, stock is trading at 3290. One can keep SL at 3205. And if you talk about target wise, the way stock is trading on its daily chart, first target would be at 3360, 3360. And if stock breaks this level, then further upside would be there up to the level of 3460. So again, we can expect 5 to 6% of return from this counter. So from the auto space, M&M and TCS both looks very good.
Okay, fair point. Let me just also pull up some of the other spaces, broader markets to see if there are any other trends that we can mark out for our viewers here. ISMO is up by 16%, R Systems is up, DCX Systems is higher in trade, Royal Orchid Hotels from the hotel and hospitality space is up, even Lemon Tree was up in trade. Anything from the tourism hospitality basket, hotel space, Kunal, that you'd like to mark out? We are heading into the festive season. Anything here?
Well, since last 3 to 4 days, we have been witnessing very good upside momentum in the hotel industries. If you talk about Lemon Tree, Indian Hotel, or if you talk about Royal Orchid, I think all the stocks are performing very well. But I am not suggesting to go for to get into the stocks because risk reward is not in favor for creating any fresh position in these counters. But if you have position in this counter, then hold this counter because all the stocks have already given a good breakout of its recent top. And not only this, all the stocks have been trading about 100 days moving average. So good upside would be there in these counters. So no fresh recommendation from my side because of no proper risk reward ratio. But yes, if you have the stock in your portfolio, then hold the stock. Further gain would be there.
Okay, got that. I hope this has also given you an understanding, viewers, as to how to go about some of such stocks as well. PSU space particularly, Kunal, if I ask you, anything interesting here or are you staying largely away from the PSU basket?
Well, if you talk about PSU basket, PSU stocks, and the way all these stocks have been trading on its daily chart, I think one should avoid as of now because I'm not seeing any spark in this counter as of now, and no. I'm not getting any confidence in this counter as of now. So one should focus PSU counters because if you look after this PSU bank or other PSU counters like Call India, Power Grid, and all these counters, no particular direction is there. So please avoid this counter as of now.
avoid this counter as of now. Okay, keeping that in mind as well. Only pharma and consumer durables viewers are the sectors that are holding up apart from media. Rest all of the sectors have pulled down. This is despite the fact that India VIX is also lower by about 0.8, 0.9 odd percent. Let me look at any Nifty next 50 names. Divi's Laboratories, yes, this was is ticking higher. So from the diagnostic space, even there is a brokerage house report that's been pretty positive. Citi has given a buy rating and a target price of 7,750. Saying that the recent weakness in the stock has emerged as a buying opportunity. They think, valuation is in line with the smaller peers. It's reasonable due to the sectoral tailwind. Company's pipeline, is also strong at this point in time as well. How would you look at Divi's for that instance?
Well, if you talk about DVs, right now this stock is facing strong resistance at 6,210 level. Even before stock faced the same resistance, and after it went up to the level of 5,950 level. No doubt today stock is trading with the gaining momentum of 1.5 percentage, but it's a cautious view from my side. If stock is sustaining above 6,210, then only one should get into the stock, because afterwards we will get the breakout plus confirmation as well, and stock may march toward the level of 6,350. And if stock sustain above this level, then further upside would be there up to the level of 6,730. So as of now, one should keep an eye on this stock. But if stock breaks this 6,210, then only one should get into the stock.
Fair point. I hope this has also helped you out there. Let me just pull up the capital markets related stories as well. Now, CDSL has picked up some pace, 0.7% higher. You're also looking at some improvement across the board, but BSE I think is also just now turned flat at this point in time. These were the stocks that were really affected. Angel One is also higher by 1/10%. BSE has also come down, come up into the green as well. Kunal, as of yesterday, there was this entire space was under pressure because there was a fear that with the SEBI looking at increasing the tenure of weekly derivatives contracts, there could be an impact on both exchanges as well as brokerage houses related stocks. How would you look at this space? Any suggestion to the viewers there?
Well, I think one should avoid this, capital market phase, Angel One, BSC, MCX, and other counters, because I think SEBI is thinking on to eliminate this weekly expiry to curb this volatility, and diverting most of the traders traders trading on cash market. So they are thinking to eliminate this weekly expiry, and but obviously it will have a big impact on BSC and other broking firms stock as well. So I think one should avoid these stocks, but yeah, one should keep an eye on CDSL right now. The way stock has been trading on a daily chart, we may see a good upside momentum in this counter. Stock has been trading over its 100 days moving average, right now trading at 1580 level, and from the present level, we may see a very good upside momentum with this counter. So one should get into the stock at present level, the strict stop loss of 1520. And if you talk about target wise, the way stock has been trading on a daily chart, first target would be at 1630, 1630, and if stock break this level, then further upside would be there up to the level of 1710. So yes, I think one should avoid this broking counter, the exchange counter, but one should focus on the CDSL counters. I'm getting good confidence, good conviction in this counter.
Okay, fair point. Kunal, towards the end, it's half an hour of the candle is already formed. Tell us what's the strategy that investors must follow for the day and also for the next week. What is it that you will look at?
Well, right now Nifty is trading at 24,977. As I'm expecting, we may see further fall up to the level of 24,850. So if you have a short position in this index, then please hold the stock up to the level of 24,850. From there, we may see some kind of bounce back. So from my side, hold your short, but not to go for fresh short position.
Okay, got that. Thank you so much then, Kunal, for being with us on the show today and guiding us with all those pockets and the views on markets as well. All right, viewers, we'll start wrapping up the morning edition with the market coverage now. So let's look at the Nifty, 24,977. There's a 105 point of a drop on the Nifty right now. So after 6 consecutive days of move on the higher end, today you're seeing signs of profit booking emerge, and that's across the board. Sectors like oil and gas, metals, So from the commodity basket, there is profit taking. Realty is down, banks are down, heavyweight sector, IT is also down in trade. You're looking at even the consumption basket, both auto and FMCG, which were so far the winners of this week because of the GST tailwind, those are also declining. You're also looking at mixed trade on the broader market. Small caps down, mid caps still hovering slightly higher in trade. So it's the defensives, pharma, that's leading the move. Consumer durables, some up move that you can see. Media stocks and some mid cap gainers at this point in time. But largely it's a stock specific kind of a market. Sectorally also you don't see like an across the board kind of a move right now. So BEL is among the top movers on the Nifty. It's the top one. Bajaj Finance, Geo Financial Services from the NBFC space have ticked higher in trade. Auto space stock, M&M is higher in trade at this point in time. You're also looking at Shriram Finance, L&T, but a large part of Nifty stocks have actually slipped, barring about 7-8 stocks into the green. Rest all of them have actually slipped. Asian Paints is the top losing stock at this point in time, 1.4% lower. HCL Tech, Grasim, SBI Life, Hero Moto, these are all the stocks that are declining in trade. Top movers in the F&O pack, Vodafone Idea, 3% higher. Aditya Birla Fashion and Retail, 3% higher. Tube Investments about 2.7% up. Inox Wind is also higher. On the losing end, Samvardhan, Motherson, Fortis Healthcare, Oberoi Realty, Tata Elxsi, Page Industries, these are all the stocks that are slipping in trade. But Nifty 500, many of the stocks that are actually ticking smartly up. Look at MNB Engineering, look at Imami Paper, look at all-time plastics, recently listed stock, how it's moved up 5% higher in trade. You also have names like HOV Services, Bafna Pharmaceuticals, that's higher. BGR Energy Systems is up. You also have Gujarat Apollo Industries, that's higher in trade. PTC Industries is now ticking further up, 7.8% higher in trade today. Royal Orchid Hotels, DCX Systems, R Systems, these are all the stocks that are moving up in trade as if now. So we'll wrap it up on that note on Market Today morning edition, but we will continue to track every market move that you must know of throughout the course of the session today. So stay tuned with us on Business Today Television. If you have any questions about the stocks in your portfolio, you want to seek a professional guidance, well, join us at 12 noon, where 2 market experts will be able to help you on whether you are holding the right stocks at the right price. Is there a need to reverse your strategy at all anywhere, which can actually benefit you ahead of what you may have actually thought for your own portfolio? So stay tuned for that. 12 noon, you can send me all your questions on the WhatsApp number that continues to flash on our screens as well. Thank you so much for being with us.
That India and Russia have nurtured one of the steadiest relationships between major nations in current times is now widely recognized.